Okay, good evening, everybody. It is 8 o'clock on the East Coast, 6 o'clock here in Colorado, and today is Wednesday, the 12th of February. This is our X-Subscriber monthly webinar. The goal of this is to answer the questions that you guys have sent in, and as you know, those questions have been sent in to the designated email. So let me just pull that up here. And where did it go? It was just here on my screen. Anyways, we are recording, so that's good. We're live. And let's get to our first question, which is from David. And David asks, recently on one of your videos, you commented that an anchored VWAP pinch needs to be tight. Could you explain how you assess this? Is it a percent base? Like, is 10% large? Or you look at percent ATR? Truthfully, it's just eyeballing it. I mean, when you look at it, again, so I'm trying to make this clear because for whatever reason, when I wrote the anchored volume weighted average price book, people seem to really be into the anchored VWAP pinch. It's just another little tool. It's not the end all. And what we're looking for is, as I've pointed out with the Russell 2000, for instance, this is a useless. We're out of it right now. But if we continued to remain in between the two anchors that are significant right now, number one, the anchor from the election, and two, from the beginning of the year. If we were continuing to stay in this is just too wide. And the way that I assess it basically is this, is that when you look at it, this is a wide pinch, meaning what we're looking for is something along the lines of this, is a real compression of energy. While it has these big ranges, we don't want to buy the breakouts past there, because then what do we put our stop way down here? Instead, what we're looking for is we want to see that range tighten. Then if, let's say, for instance, we were able to buy it right here, then we would set our stop below the low of the pinch and the most recent relevant higher low, which would be right here. If we were to buy right here, our stop would be there. If we were to buy here, our stop would be there. So we want that to be as tight as possible so that we can manage our risk more carefully. And the reason that we look for that is it takes for the stock or the market to rally from 230, 223 up to 230, that's a 7-point rally. That's, what is that, 5% or so. So we want to look at it and say, we don't want it to be extended once it gets to the breakout point. So it's not a percentage, but it's more of just, kind of common sense, I guess, or maybe it's just because I'm used to looking at them so often that I look at some of these, then people will point them out on X and that sort of thing, and they're just completely missing the point. I mean, you can find a pinch in anything, and I really mean that. I mean, you could look at the let's just take a look at Coinbase. I haven't looked at this, but you could put an anchor off of this peak and let's say this low even, and you could say, hey, it's pinching between the anchor from the peak and that September low. Well, if it was in there, it's useless. What we want to see is, even on a shorter term time frame where maybe it's pinching between the anchor off of this peak and this low, so that we can see it kind of, doing something like this, making these higher lows and not being extended when it gets to a break point. So good question there. Hopefully that answers that for you, David, and anyone else who is probably wondering the same thing. Let's see. This is from Hamed, which is, I do see an ascending triangle maybe on CarMax on the weekly time frame, and CarMax is what I'm looking at. What's funny is, I turned my computer off earlier, and then TC2000, which, by the way, that's what the software is, if anyone's wondering. This is TC2000. It's my preferred charting platform. I know a lot of people use TradingView, and TradingView is excellent. I've been using TC2000 for quite a while, so that is what I'm most comfortable with, and they're the ones who first put the anchored VWAP on software at my request, and I'll always be loyal to them for doing that. Anyways, so this person's talking about an ascending triangle, and I can see what you mean by that because we have these higher lows. What I was going to point out here is that I've never seen these on TC2000 before, and this is just the earnings. That's what those numbers are. I'm going to figure out how to turn those off after this because I kind of find them distracting. How do you analyze this chart, and how do you play it, or if you don't play it at all? Well, this is one that's on my radar as well. This is the anchored volume weighted average price off of the COVID low, and you can see we've been banging up against that. This is the anchor off of the all-time high. That hasn't provided much value because we keep going up to it, through it, and not really doing anything. I see we're above a rising 20, 31, and 42-week moving average. So I've been looking at this stock here on the weekly time frame saying it looks like it has the ability to get going here. This prior support has been acting as horizontal resistance, and this is similar to a pinch, and it's a compression of energy, meaning that we have these higher lows. The buyers aren't waiting to take control at 60. Instead, they took down at 60 here. Instead, they took control at 70, and then they took control at 73. Then they took control at 80. So that's what we're looking at, is the buyers getting more aggressive price-wise. Then we look at the top and we see they're getting more aggressive time-wise because the distance between the time between the test of resistance is getting less. So they're getting more aggressive time-wise as well as price-wise. So when I look at CarMax, I look at this, and as I've been saying, it's kind of like a broadening formation in here. This is not what you want. This is the opposite of what we look for. We want to see this in the opposite direction. We want to see something like this, where the range gets tighter and then breaks higher. But when we look at a 30-minute time frame, for instance, I'm just going to turn off the post market because it just tends to be a little bit distracting. This is what I've been talking about for Alpha Trend subscribers the last couple days, is that you look at the personality of the stock and you say, okay, we're up at this level where it came up to this level pretty quick once, and then it got rejected fast. Then it got then it came back up to this level again and got rejected hard. Came up, rejected hard. It doesn't mean it's going to get rejected hard here again, but you have to look at it and say what's most likely, not what's possible. It's possible it can continue to move higher. It seems more likely, and in my opinion, I'd much rather see it do this. That means I'd rather see it pull back here, even if it broke out tomorrow, let's say beyond this level. I'd love to see it pull back a little and carve out a higher low, and then be a buyer as it breaks this level with a stop under here. That is what I would be looking for, and that's how I always look at stocks, is that I want them to not be extended when they get to an important level. A lot of people talking about TEM, and rightfully so. It's just doubled here. But the thing is, you have to look at it and say, what's the personality of the stock? This is the third visit to this same zone here in the last 6 months. Last two times it came up quick and then it just got smashed. Now we're here again. Is it likely that after the stock doubled in a month that it's going to be able to continue to move higher? It doesn't seem likely to me. Is it possible? Absolutely. So I wouldn't be a buyer of this stock up in here, but I would be saying, hey, it's holding these higher lows. So I would start, I would be raising my stops up underneath the higher lows for the 5-day moving average and saying anything is possible. What's probable? What is the history of this type of stock? So it's not just in a stock like CarMax, but here in this TEM as well. Jitta says, background, thank you for the post yesterday, February 10th. My question stems from when you reminded that the Q needed to come back down to the 5-day. I didn't say it needed to come down. I said I would prefer it comes down to the 5-day moving average. I never say it needs something or it has to do something. I always state my preference is that I like to see a pullback and then get going rather than rallying from an extended level. So, same theme of these questions so far. And the theme being that, I don't want to buy breakouts. A lot of people have been trained to buy breakouts, to buy a break past the prior high. Well, you have to ask yourself, where has it come from? In the last, three sessions prior to this breakout, this, the Qs rallied 20 points. Sure, it's possible it could rally, but it's more preferable for it to pull back first. So the question is, do you prioritize the daily VWAP over the week today or year today, or how much weight do you give the 5-day on the daily and 30-minute charts versus the anchored VWAP? And the answer is, like a lot of questions similar to this is it depends. It's not about which one's most important, but instead how do they flow together to give us the most complete picture that tells us here's what appears to be a low risk, high probability setup. That's what I'm most interested in. I want it ideally to be above the anchor from the beginning of the year, from the anchor from the election, from the low of the year, and the week to date volume weighted average price. I definitely wouldn't buy while it's below the daily VWAP. So it's about how all the pieces flow together. And I don't have a ranking formula, but let's say there was 100 points assigned to a trade. Well, if it's below a declining 200-day moving average, then I'm going to maybe take 50 points off of a long. Doesn't mean you can't make it, but it automatically says it's below a declining 200-day moving average. So Intel is a good example of that. I was asked about that this afternoon. So with a declining 200-day moving average, I say, you know what? This is a stock that is below a declining 200-day moving average. Most of the time, rallies below a declining 200-day moving average will fail. That's just a fact. Now, maybe if the group was strong, I'd say, well, the group is strong, so I'll add 10 points back to that. And then I'll say, well, it's above the 50-day moving average, so I'll add 10 points for that. It's above the 5-day moving average, I'll add normally, let's say 20 points for that, but because it's 3 points above it or 15%, then I will take those points away and say, I'm not interested in it so extended. So it's all about coming together to form the entire picture. It's not about one piece of information being more important than the other. It's about the cumulative picture of how they come together. And it all begins with multiple time frame analysis. So that's what we want to see is, do we have trend alignment here? No, we have a longer term downtrend in Intel and we have a short term uptrend. Those trends are not aligned. They are telling us different pictures. They're saying long term, there's sellers in the stock. That's why we expect rallies to fail. Now, how far can this rally go before it's likely to encounter supply? Well, maybe it makes it up to last year's anchor. Maybe it makes it to the anchor off of this peak. And we're right there. And we've expended a lot of energy. So, I don't like Intel. Maybe Intel can rally up to the 200-day moving average, and that's fine. But now you have to say, if I'm going to buy this, where does my stop go? Does it go underneath this, one of these higher lows? The more extended you get, the more likely it is that it's running out of gas, basically. That, if there's a 20-gallon tank, here we've used 15 gallons. Yeah, we can keep driving this, but maybe we're just going to drive around in circles and wait for somebody at the gas station. If there was a long line, we'd be waiting, to fill our tank here. Or we're just going to continue to coast on those 5 gallons, whatever it might be. But it's the cumulative that matters most. Burgesh says, my question is, in this choppy market, how do you use the anchored VWAP and SPY and Q? Can you provide us with an example? And the reason I look at the SPYs and the Qs every single day in the midday video and every single day at the end of day video is that questions like that, I have a hard time answering a question like that, Burgesh, simply because I show you each and every day the VWAPs that I use. I show you on here, and I don't change these unless there's a reason to change them. But, here's our week to date volume weighted average price. We're right at that. We have the declining 5-day moving average right here. We, when I look at the shorter term time frame, such as a 5-minute, I kind of showed you today, the point of that tweet was, right here early in the morning was, hey, it's rallying up to the anchor off of the recent, the month to date, and then it pulled back from there. And now, how does it respond to these VWAPs? And it's having trouble with these from the last 3, 4, 5, 2, 3, 4, 5 days is where we're seeing a little bit of difficulty right now in the SPY. So, it's not a specific enough question, Burgesh, for me to really answer it very well, simply because I show you these things every day, and the reason again that I use the same vehicles each day, that is the same ETFs, is to teach you the concepts by try, and I try to show you the logic of, hey, I didn't show it here, but here's today's volume weighted average price. When we get back above the volume weighted average price and we hold on, then I look at that and say, okay, now from a day trader's perspective, maybe I'm looking to buy strength after a pullback to that level and then set a stop under here. So it's all the same exact principles that I talk about all the time. And I'm showing you each day in real time with the same vehicles, so you can kind of start to clue these pieces together. And if the concepts aren't making sense, then I think that it's best that you go back and review some of my videos about the educational videos about the Anchor VWAP I've done. Go back and reread parts of the book, because the answers are all out there. And this is basically the real time classroom is what I'm trying to do with these, this analysis. We can talk about, for instance, BBAI today. If you go back and you look at, BBAI, what I mentioned, it was right here. The stock was right here. This is almost the exact spot that where BBAI was. And here we're looking at a 2-minute chart. Someone asked me about this, and I said, listen, you can go back and look at it. I'm not going to redo my analysis. But I said, it might be a nice day trade if it got above here, to buy it above here with a stop either under this low or under this low. So again, what is the point of these stops? One, this is a super tight stop. This is a looser stop. And I said, if you buy it above here with a stop under there, and if it breaks higher, then you might want to raise your stop up under here. And then what do? We then, as the stock continues to move higher, as it makes this high, we raise our stop under here. As it makes this high, we raise our stop here. As it makes this high, our stop goes there. As it makes this high, our stop goes there. And that's where the stop would have gone, taking a trade from, in this case, a price of, if you were paying attention, there was an easy trade here at this price, which I'm trying to find here's what I'm looking for. So let's just call it $9.10 up to the breakdown point of $9.68. So there was a good 58-cent move here using the principles I outlined in advance. I mean, I showed exactly how to use this. So a 58% move. A 58-cent move, which is a 5.8% move, that's a beautiful day trade. Those are the types of trades that you're looking for, saying, hey, it's making higher highs and higher lows. It came very close to daily R2. So do we then use the 2-minute exit, which again, I'm trying to show the example of, here it makes this, it comes close to daily daily R2. So we use our 2-minute exit. As soon as it makes a 2-minute low, boom, you would have been stopped out there, or as it breaks below here. So you might have made 70 cents or 60 cents per share, 6% in just a matter of, from 3 hours. So these are the types of things I expect people to be looking at this and saying. That's why I go through the detailed analysis and say, I'm not just talking about BBAI here. I'm talking about the principle of the range has tightened in here, and if we buy it above this little area, we can set our stop there because we're above the daily, the 2-day, the 3-day, the 5-day, and the VWAP from the day the market made a low on that red one. So that's what we're looking for. We're above a rising 5-day moving average. These are the types of trades where I explain them in detail in advance to say, this is how you want to trade the stock, not because I want you to trade BBAI. It's because I want you to understand the principles of what makes a good trade. So, because I'm not going to sit there. It's just beyond anything I have any interest in, is to, be in the Discord room or call things out on Twitter and say, hey, I like BBAI above this level with a stop under here for a day trade. I might trade this myself, but I'm not going to do that. That's just not what I do. I run a swing trade service, and when there's low risk, high probability swing trades, then I'm very happy to to show those. So the next question is from Nick, and Nick says, please walk us through the price action that caused you to make the decision to cash out of crypto on Tuesday. And I will do that, Nick. But I'm going to go through all the stock stuff first, and then we'll do crypto at the end. I will definitely do that crypto, though, because there's a lot of people interested in it. Next question is from Justin. Says, thanks again for all you do. Your daily videos are becoming my daily habit. I really look forward to, especially that gap down advice for waiting for the first 5 to 15 minutes. That video alone paid for my subscription. Well, it's $10 a month, so I hope it saved you more than $10. And I'm, kind of joking about that, of course, because it's a ridiculously low fee for if it kept you in, a stock. Let's say it kept you in the SPY. If it kept you in the SPY here today, people, and this is why I've been saying it, and I say it loud, and these are the principles that I want you and expect you to learn. This is not something I'm going to point out every single day. Hey, don't forget the 5-minute rule. I'm going to teach it to you, and I'm going to remind you once in a while, but it should be automatic part of what you do. Just like, selling some, looking to sell some at daily R2. If it's a short-term trade, I'm not going to tell you, hey, it's a daily R2. I expect you're looking at your charts and you see it's a daily R2. You have to take the responsibility for your money. Anyways, Justin, I'm glad it saved you here because anyone who sold it on the open, you got exactly what you deserve for being an emotional little bee. And I'm not being mean, I promise. I'm saying things so that you can remember them and say, wait a minute, do I want to be an emotional little bee without a plan, or do I want to be a professional and give it a little bit of room and say, hey, let's see what's going on here. Let's let cooler heads prevail for a moment because some people are freaking out, and that generally isn't the right way to handle things in the stock market. So let cooler heads prevail. Wait, and the market came almost all the way back for the S&P 500. Question is, how do you suggest learning to sell into strength, um, uh, especially for someone transitioning from buy and hold strategy? I mean, I don't know how to suggest how to, you learn by doing in the market. You'll learn not to sell your stocks on the open by not doing it and saying, hey, that worked. It wasn't so scary. It sucked on the, first thing in the morning. I don't know how to tell you how to do that other than to show you the principles. And then you've got to say, hey, that makes sense to sell some on strength up near daily R2. I spoke about BBAI and how that has the SPAC stink on it, that 10 might be a level of supply. So as it gets up towards that level of interest, it doesn't automatically mean sell, but it means start to think of the strategies being, do I want to set my stop under that higher low, or do I want to set it up underneath the low of the last 2 minutes and get out here or get out here? Either way, you had options. The best way, we'll always know in hindsight. We never know whether we should sell some, at daily R2. The thing is, if you waited for daily R2, you didn't get to sell any. And instead, you'd have a full position. Maybe you sold part of it here and are still holding some, and that's great. What's your time frame? It's different than what mine is. Maybe everyone has to really, again, make the trade their own and understand what is your time frame and what are the principles. How can I make these principles work for me on the time frame that I'm most comfortable with? It's not about me giving you the answers. As much as it's just so overdone in the stock market and just in general, I'm not trying to say buy here, sell there. You will learn nothing from that. And I'm not here to say, hey, this stock's going to explode as soon as it gets back above this level. I'm going to say it looks like the momentum should continue back above this upside. Seems like it has good potential, but my goal is to protect gains. I've been doing this for more than 6 months. I'm not going to get excited every time I buy a stock and think it's going to moon and start putting rocket emojis and all this other nonsense out there and calling for big price targets and being bullish whether the stock's up, down, or sideways. If it starts going down, I don't like I don't like the stock anymore. Why would I? If I'm a trend trader and I buy the stock, it makes a higher high. That's great. Now I expect that stock to make a pattern of higher highs and higher lows because that's the definition of trend. I'm a trend trader and I'm looking at it saying, if it doesn't continue to trend, well then why am I in this stock? Why would you be in a relationship with someone who, let's say you married them because they were straight and then they turned gay. You're like, wait a minute, I didn't sign up for this stuff. Now you're gay. What's going on? I got to get out of here. Whatever. That's a bad example, of course. But the point is, we have to say, what am I expecting here? And if things changed, am I just going to be a sucker and sit there and accept that and say, well, I thought it would still go higher, so I like it. It doesn't matter what we like. The market doesn't care about our opinion. The market, a stock like, the SPY trades 45 million shares a day. Go in there and trade, if you're a big shot, go in there and trade 10,000 shares. It doesn't matter. It is a speck on top of a speck. It means absolutely nothing. So I don't know how to tell you to do some. Just do it. You start by doing, Justin. That's the way you get comfortable with doing anything. David says, hello, Brian. Hope you're doing well. I am. Thank you. My question is based on the principles of trend discussed in your first book and in your second book. It appears that your intraday charts you show on X primarily use anchored VWAP and only the 5-day moving average. The question is this. For your intraday charts, why aren't you using the short, intermediate term, longer term moving averages as shown in chapter 10? Are you only using the 5-day and VWAP? Dave, just because, that book was written in 2008 and my trading style has evolved, and I've found that I like to keep my charts as simple as I can. When I'm starting, when I'm adding, these VWAPs, and then I have maybe, 2 or 3 other moving averages, it becomes too much to look at, really. So it's just a matter of simplifying it and saying, what's the most important pieces of these puzzles? Well, is the trend line the most important piece? Oh, is that a trend line because it passed through prices? Well, sure it is, because that represents the essence of these lower highs. So there's no real good reason other than my trading and analysis has evolved. I want to simplify it. I want to focus on what's most important. And realistically, from a swing trader's perspective, the 5-day moving average is your best near-term indicator, hands down. I've looked at them all. For me, that's without a doubt the best. Some people say a 5 exponential. I've said over and over again, if you're using an exponential, we can't be friends, because I've done the work. I've shown it that it doesn't give you good signals. It gives you way too many early signals. And if you want to use an 8 EMA, like, why? Okay, good. Do whatever you want. But I've been doing this full time since 1991. I've tried them all. And, this is what works best. That's the real reason, is because this is what works for me. And I have, slightly changed my analysis so that we don't need all of those is really the way it goes. Jake says, what are some tactics for getting into a stock if you miss the initial buy point? I'm often hesitant to the buy if the price is extended from the pivot, even if it's a leading stock in a good market. Well, that's easy. You look at a stock and you say, let's look at some of these leaders. What if you wanted to be involved in Apple? Chase the gap or wait for VWAP. Or let's say this morning, you bought as it bought, it pulled back to the volume weighted average price and bounces from the VWAP. That's where you want to get involved. Looking at Meta, Meta. So let's just look at Meta on a shorter term time frame, right here. So if you didn't get involved right away, what do? We look to buy bounces from the volume weighted average price with a stop below that low. It's really simple. It's the same thing all the time, is to say, where is a low risk, high probability setup? I don't want to buy the pullback while it's pulling back. I want to buy as it's bouncing from the volume weighted average price. I want to look at Apple and say it's bouncing from the volume weighted average price. I want to buy strength away from there with a stop underneath that low. I want to look at, you wouldn't want to buy AMD because it's in a downtrend. A lot of people still buy it. I don't know why. It's in a downtrend. To me, it's stupid to buy this stock. But it's the same principles all the time. Read the books. The answers are in there. And I'm not trying to, hawk books here. I'm trying to tell you the answers are there, and it's really pretty simple stuff. Tyler says, I greatly appreciate you sharing your knowledge. What adjustments would you make in your strategy if you had to follow the pattern day trade rules? Sometimes I'll get into a trade, and if it doesn't go my way, I can't get out after the appropriate anchor out at the appropriate anchor I've set. Just wondering if there's any way to tweak, or would you do differently if you had to follow the pattern day trade rule? I don't even remember what the pattern day trade rule is. I know you have to have at least $25,000 in your account. And if you don't have $25,000 in your account, you can only do $25,000 worth of transactions a day, I think. I would just choose my trades very carefully and save my money to make sure I don't have to have that restriction. I apologize. It's been so long since the pattern day trade rule has really meant anything to me in terms of that being a problem as far as positions go. I just don't think I'm qualified to answer that because I don't. Yeah, I just don't. I'm sorry, I can't help you with that one. Maybe trade options, but that's a different story. Um, be very careful in what you choose to trade if your hands are tied in a way that you can't make the number of trades that you want, you need to manage your risk effectively. Scott says you sometimes refer as a stock as expending a lot of energy to ascend to a higher price. That's true. That's part of the questions that everyone should answer before every single time they get involved in a stock. Number one, where has the stock come from? And when we look at a stock and say, where has it come from? We say, we could take a look at, for instance, NVIDIA. If you were looking at NVIDIA the last couple of days, there it is, and you were looking at buying it, you would say, where has it come from? Well, it just came from 113 to let's say 130, 133. It just rallied 20 points. So 15, 16%. It just rallied 16%. It's expended a lot of energy. It's, where does it, in relation to where does it have the potential to go before it's likely it might encounter supply? And we were looking at the anchor from the election and the 50-day moving average. So it's not necessarily risk reward here, but that was 3 points away. That was 18 points. It's expended a lot of energy getting there. And then is the risk worth the potential reward here? So let's say it gets up to that. And again, it's not a price target. It doesn't mean it has to halt there, but it's saying, it seems reasonable that after a big move like this, there might be supply in that area. So the question goes on to say, how do you assess whether stock has expended a lot of energy in a run-up, and what are the implications either way? What are we looking for in terms of possible future direction, either not much energy versus a lot of energy? Well, it's more about, again, where has it come from? Has it, and here's a thing that almost, and this has happened, I've noticed this for over a decade, that when I do webinars and people ask me about a stock, they almost always, the majority of the stocks that people ask me about, it's really a strange thing, are stocks that have just run 10% in the last 3 to 4 days. And I always tell people, listen, sure, it can continue to move higher, but, think about the people who bought big positions at lower, smarter prices, and it's on 10% in 3 days. 10% return in 3 days is huge. It's not huge compared to what everyone talks about with the rocket emojis and all that nonsense, but it's a big move. How long it takes you 2.5 years to earn that in your account, on your cash balances. So you have to look at it and say, what's reasonable in the market? There are always outliers. There are stocks that are going to go, completely bonkers, but you have to say, I'm here to manage risk and make sure that I hold on to the money that I make. It's not just about buying a stock and watching it go up, big and then coming all the way back down and not having a strategy, but it's about, how did it get there? And it's just, again, it seems to me, because I've been doing it so long, that sometimes when you've done something so long and it becomes second nature, to me, it just, I look at a stock and say, it's just common sense that I don't really, think this is going to, continue to go. I haven't done enough work on this, but maybe you look at it and say, so the ATR percentage for I'm sorry, NVIDIA is 6%. So maybe once it's moved 2 Rs in a short period of time, then you start to look at it and say, it's getting a little bit extended. It's done 2 times its average daily range. Maybe it's 3R. I don't know. As I said, but I think 2R might be a reasonable place to start thinking about that. It's not something I've done actual sit down and look at in terms of trying to quantify, because I've been doing it so long that it just becomes human nature, second nature, not human nature. It becomes second nature to me to just kind of look at it and say, yeah, it's getting extended here. Maybe I'll day trade this thing, but I'm not expecting it to continue to move higher. So Leon says, with this subscription, you do a great job of covering the overall market. Thank you. What advice would you provide to someone trying to figure out how to create a watch list of tickers to potentially apply to your teaching? One, I'm not here to sell this. I'm just to let you know that's what alphatrends.net is. It's a much more expensive subscription, but if you're not familiar with it, please go to alphatrends.net, because when you hear the midday video, when I cut it off abruptly, that's the point where I continue to update the individual stocks for the Alpha Trend subscribers. There's a Discord where I answer questions, and there's just there's 2 other webinars each month. And anyways, the question is, how to apply a list. And, that's the, I think the last chapter of my first book, but I'll go through it quickly, which is I do all of my screening for stocks manually. I don't think there's a problem having, I'm not a fan of screeners, scanners, whatever you want to call them, for this reason. When we look at a screener, we're telling the market, here's what I want. I want stocks that have pulled back 3 days in a row, volume diminishing each of those days, still above a rising 20-day moving average, the 20-day moving average above the 50-day moving average, 50 above the 200. So I've got a trending stock that's been pulling back. There's nothing wrong with that, but that's not always going to be what's working. So when I look at stocks, the way I do it is I have a long list of stocks, and I go through those and I apply an eye to them on 6 different time frames. I look at a chart screen that looks like this. I've got a daily chart, a 65-minute, a 30-minute, and a 10-minute. And I go through stocks and look at them like this, and just go through manually and say, wait a minute, look at that. That's a nice tight consolidation in AVGO. So then that tells me I want to go take a closer look at AVGO. And then I look at AVGO on the daily time frame and say, that's a nice tight consolidation. And, here it's stair-stepping higher. Is it too far extended, though, on the shorter term time frame? Meaning, where has it come from? Well, it just came from 196 up to 236. So it just rallied 40 points on a $200 stock. That's 20%. Do I want to buy a stock that's up 20% in just 3 weeks? Or I would be more interested in this stock if it did this, has a nice shakeout, recovers, and then gets going. So for me, it's not about telling the market what I want. It's more about listening to the market and the market telling me, here's a nice tight consolidation. MIDD. This is a nice, low volume pullback. It's pulling back, but it's in pullback mode. It's making a pattern of lower highs and lower lows. So some people will buy the stock as it touches the 5-day moving average, not shown here, as it touches the 10-day moving average, which probably looks like this. We can go, here's our 10-day moving average right here. So, or that's the 20-day moving average, sorry. So where do I have the 10? So here's the 5-day moving average, orange. Red is the 10. Some people might buy the touch of the 10. Some people might buy the touch of the 20, and maybe that was the low. What I'm looking for is something along the lines of this, and then buy here. So I'm looking at the stock, and there's, again, you can say I want to buy, look for stocks that have been pulling back. They're still above the 20-day moving average, and maybe you're looking at the ones below the 5 as well. Or a stock like BHF, which is kind of the same story. Some people buy it at the 5. Some people buy it at the 10. Some people are waiting to buy at the 20. I want to buy when it does something along the lines of this. So, Leon, it's about, maybe starting with a small group of stocks. Maybe you want to look at, the NASDAQ 100 and go through that manually each night and look at those 100 stocks if you have the skill set to do so. And it might take you an hour, it might take you 4 hours. But this is how you really learn to get involved, to listen to the message of the market. So look at those same 100 stocks every night. And someone said, I'm sorry, I just got distracted. Can you hear me? Please let me know. Just type a Y or a D, anything. Yes. Okay. Somebody said they had a problem with the audio. Steve did, and Steve says it's fine now. So just wanted to make sure. So anyways, the point is, you've got to learn to listen to the message of the market. How do you listen to the message of the market? Do you listen to the message of the market by telling the market what you want? No. You listen to the message of the market by going through a list of stocks and ETFs, and that's why I go through these ETFs every day. We're listening to the message of the market. What have I said about the message of the market? The market is showing us uncertainty. So that uncertainty is telling us a very clear message, which is it's not in a period where we're expecting big things to happen here. It doesn't mean it can't change, but right now the odds say for the semis, not much is going to happen. We're in the middle of a range. For the biotechs, the message of the market is don't be looking for biotechs and uptrends that are pulling back because the group itself is in a downtrend. What's the message of the financials? This is a strong, strong group. It's undergoing a little bit of profit taking here, but it's super strong. What's the message of the TLT? It hasn't made a bottom. All these knuckleheads that keep saying it's made a bottom, there is zero evidence of that. It got rejected twice with a declining 50-day moving average. It's not because it's above a 50-day. Being above a 50-day moving average doesn't make it bullish. The 50-day moving average is declining. It's guilty till proven innocent. Rallies are likely to fail. This is supposed to happen. It's just like I've been talking about Oxy for the last close to a year. I've been saying, I don't understand why everyone is so interested in Occidental Petroleum just because Warren Buffett is buying it. Let Warren Buffett buy it. What I see here is a stock that's below a 20, 31, and 42-week moving average. We've got a pattern of lower highs and lower lows. It's guilty till proven innocent. I see someone just typed something into the questions. Most likely, we're not going to answer that question. The questions always get the priority that have been sent in to the email address. That's why that email exists. So ORK, I don't think we're going to get to your questions because we've got a number of questions here still not answered. So, go through it that way. Take a look at the stocks each day and, look at the ETFs every day and then look at the MAG stocks every day and start to anticipate what's going to happen rather than telling the market, hey, here's what I want. I'm so important. Listen to me. That's not how it works. We are little specks of dust in the market. Our opinion doesn't matter at all. What we need to do is listen to the market and say, of course, Oxy's going to fail when it gets up towards this range after a rally from 46 to 49. Why do people get excited about that? It's so stupid. Where has it come from? It just rallied 8%. Where did it have the potential to go? Well, we've got a declining 20, a declining 50, a year-to-date anchor in here, and the anchor from the election, all in this zone. And people are surprised that it pulls back from there? That's just ridiculous. Listen to the message of the market. Tim says, question for tonight's session, do you find anchored VWAP works better or worse with stocks with certain characteristics than others? I absolutely do not. I never think of it that way. What I do notice is when I look at a stock and I put an anchored VWAP on it, and prices don't show me any reason, anything to be interested in, it means, hey, the message is clear there. Go look at a different stock. So it's not necessarily a different type of stock. I'm in the early days of playing anchored VWAP and UK stocks, not getting much joy, which I think is likely in part due to the lower volumes in the UK. So that's a little bit more specified question because you are in the UK. And I will tell you, I have never pulled up a chart of a UK-based stock. Why would I? I've got the most liquid market on the planet here in my time zones. I'm not going to waste my time, losing sleep. But that doesn't help you, of course. That answer doesn't help you. So I would just say, keep studying and finding where it makes sense. That my volume criteria is it's not market cap. I never care about market cap. Some people say, "Oh, you're trading that stock? Its market cap is just 180 million." I don't care. What I'm interested in is there liquidity for me to get in and out of the stock. And for that, I look at a 20-day moving average of volume of at least a 500,000 shares. And that typically will be liquid enough for me. The market cap, someone said that to me about there was this stock, ONDS, back in here. I was telling a friend, hey, I just bought a bunch of this one. He's like, what's the market cap? And he looked at me and he said, the market cap's only 100 million or whatever it was. I don't know. I never even consider it. Well, guess what? That market cap might have been 50 million here, but it was 150 million 3 weeks later. I'm more interested in these moves than intellectual debate about what a market cap is. Completely irrelevant. Does it have liquidity? It's trading 4 million shares a day. Back here, when I was looking at it and trading it, it was trading 15 million shares a day. That's liquidity. Market cap doesn't matter. Liquidity matters. Appreciate all these videos and webinars, says Dan. When you talk about a stock being extended, I understand the shorter term time frame, but is it the same in the longer term time frame? For example, if it's up 50% in 6 months, would this deem similar caution? No, not if it's consolidated in a low risk way. So that's why we use multiple time frames and say, is Meta extended? It is. What about the short term time frame? You could buy it here with a stop there. You could buy it here with a stop there, here with a stop there. But how much more do you expect it to go after being up 17 days in a row? Can it go 20? Sure, why not? Can it go 28? Maybe, not likely. But it's just more about, has it had an opportunity to digest a move? So over here, it went from 450 to 600. It went 33%. Did that matter? No. If there is a short-term opportunity in here, you look at it and say, is the opportunity there for me to make a low-risk, high-probability trade, and then take advantage of it from there. I don't see a name on here, just some initials, HJRE. So HJRE asks, when does an existing anchored VWAP line become obsolete? Take the election anchor as an example. When do you stop using it? Well, when the market tells me it's no longer relevant, and that's not a exact answer, but so for Meta, I could probably take it off for Meta because it's not important there, but it's important for a lot of other stocks. It's important in Mister. We keep going up to it. So as long as it's relevant. So, how long did I have the anchor off of, this low? Well, as it rallied away from it and it hadn't touched it in a while, I took that off. Now, what about the anchor off of this low? Is this important? Well, over in here, I wasn't referencing it because it didn't matter. But as it starts to make a deeper correction, I say, wait a minute, I need to go back to that prior low and say, is that important? Yes, in fact, it was super important. That's exactly where the buyers were found. So sometimes I'll remove them and then I'll put them back on. It's about what's relevant. It's not necessarily about, hey, I'm going to keep I keep the week to date anchor on there. I keep the month to date anchor on there. I don't know why it's not on this chart right here, but that's also the anchor from the recent low. So, that should be on here. I don't know how it disappears. Sometimes they disappear off of there, so I have to reset them. But that is, the recent low, and for a lot of stocks that, and for the market, that's the low of the year, and that's the month-to-date anchor. So I'm going to keep that on there until they're no longer useful, or until my charts just get so clogged up with 47 different VWAPs, I can't see price in there. I need to, make a priority and say, do I really need that anchor from the election on there anymore for the SPY? Maybe not, because now we've got the year-to-date anchor is above that, and that's probably going to take precedence. But I'm not ready to remove the anchor from the election yet, because there's still a lot of stocks that are, right in that same exact anchor area, and it's acting as resistance or support right now. I can't think of the examples off the top of my head, but it's still relevant, so I'm still going to look at it. Jan says, for how long does that's funny, Same exact question. So for how long does the election anchored VWAP have relevance? When do you drop it? So Jan, I just answered that question with the prior answer. Um, Joanne says, Brian, there are an infinite number of stocks on the U.S. market. Not infinite, but maybe more like 6,000. I'd be interested to know what a classic trading day looks for you. Is it possible to look at all the tons of chart? It's impossible to look at all the tons of charts. How do you find potential candidates? Do you work with certain filters and then look for VWAPs, etc.? And so this is, I kind of answered this question, but my routine is this. And again, this is outlined in the first book near the end. I have what I call my master list of stocks. That master list of stocks right now is about 1,300 stocks. And what I do is I look at all 1,300 of those stocks. I generally begin on a Friday afternoon, so I don't have to do it over the weekend as much. But I look at those 1,300 stocks on a weekly, a daily, a 65-minute, a 30-minute, a 15-minute, a 5-minute, and a 2-minute chart. Now, I don't necessarily study each of those, but I'm going through that list about this fast. And I look at things and I'll see something and I'll slow down and say, what's going on with XLF? Okay, I've got that one. I'll go about this fast though, and I'll say, okay, slow down. What's happening with Tesla? It's on that anchor. And I'll put it on my list for the week. And I get that list of 1,300 stocks down to probably about 200 stocks each week. And that's my weekly list. On my weekly list, what I do with that is I go through those each and every day. Now, I'm not expecting to trade all 200 of those stocks. That would be foolish. But on that list, I have all the Mag 7. I have all the ETFs. I have stocks that are in play, BBAI, Affirm. I have, the stocks that are moving on earnings. I've got leaders like Datadog, which reports tomorrow. I've got stocks like ESTC, Upstart, and Confluent, and Genie, and some of these names I've previously mentioned. These are the ones that I go through and I put them on my list for the next day. And I create an A list, and those are the ones I share with alphatrends.net subscribers. And I point out and say, here's what we're looking for. Here's why we're interested in buying this stock. We're not going to chase it here. Instead, we're going to wait for that 5-day moving average to flatten out. And then we're going to buy it here with our stop there. Why? Because that's the definition of trend. We've got trend alignment. The earnings aren't due until February 18th here. So we've got 4 market days to be able to trade this stock without that. So again, it's just about going through a list of stocks and being comfortable with them. And, I've been tracking this stock every day since about middle of last week, saying, this looks like a stock that's pulling back nice. It's starting to create a little bullish flag in here, is what I said, maybe on this day. And I didn't say we want to buy it. I said, let's watch it. We don't want to buy it today. We don't want to buy it today. We don't want to buy it today because it's showing lower highs and lower lows. And it still hasn't shown us a nice higher low yet. So maybe it just pulls back a little, makes a higher low, and then it's a buy above here. That's a possibility as well. So it's a matter of being comfortable with what your watch list is and taking it from there. Michael says, is there a similar technique to chase the gap or wait for VWAP for trading a failed breakdown similar today, or would you apply the same concept with a breakdown? Well, for instance, for today, I'm not a fan of buy the dip, but if you were looking to buy the dip, what do? You do the same thing. You say, okay, let other people gamble first thing in the morning, or maybe you want to get involved, or do you want to buy strength away from the VWAP and maybe you got stopped out there, or, buy over here with a stop under there. So here you took a small loss, or you could short it as it backs away from that 2-day VWAP right up in there, and then cover your short at the daily VWAP. So it's a matter also of, what time frame are you looking at? Are you looking to day trade this? If you think it's going to recover, buy here with a stop there. We saw that this little pattern of lower highs and lower lows reversed, and on this 2-minute candles, we have this inverted head and shoulders pattern. As like I always point out, I like to make fun of head and shoulders patterns simply for the educational point of saying we have these lower highs and lower lows, then we have a higher low, and then we have a higher high. That's a buy. Well, that's an inverted head and shoulders pattern. Look to target it up here. So it comes down to what is your time frame as well, Michael. And if you can buy in this zone right here, and you don't get stopped out, well, you take a little bit off for a day trade. Then you say, well, I still like the longer term chart. I think it's going to go. So you hold 2/3. And on that 2/3, you're in a position of strength. So if it can't survive as a day trade, though, it shouldn't be held as a a swing or longer term type of trade as well. That was Michael's question. So that one's answered. Let me just mark that. Kurt says, I'm a subscriber to, I can't find the link for tonight's monthly presentation. I don't know what to tell you. I posted it 3 times, Kurt. You'll have to find the recording, I guess. I don't know how you found the email, but not the link. That's just impossible. Justin says, and this is a long question, please keep questions. Everyone's done such a great job of keeping the questions concise. When a stock is trending up with higher highs and higher lows, and it's finally passed through a level of interest, what makes a strong enough pullback or correction via time to decide the price level is not too extended to make an entry? I don't know. It just depends on every single, setup. Is that, with a stock like Genie, was that enough? So tomorrow, what I'm looking for in Genie, because I didn't buy it above here today because of the declining 5-day moving average, I'm looking to look for a pullback and then buy a little bit of a strength with a stop under here. So it depends on every single stock. Is there a rule of thumb such as a percent pullback? Nope. To be more certain it's ready to continue higher? No, it's definitely not. It's just about listening to the message of the market. It's the art of trading versus the science of technical analysis. You're asking me about the science of technical analysis, and I don't have rules like, it's just like, stops. Stops, people say, well, you should have your stop, buy your stock and set your stop 8% from the purchase price. Well, that doesn't make any sense at all. I want to set my stop based on the definition of trend. When it makes a higher high, I look at it and say, what's the most recent relevant high or low? I'm going to set my stop below that for the time frame that I'm trading on. So in a stock like BBAI, that means getting out right here because that definition of trend, as it approached daily R2, ended right here. That's where, to me, you take the profit if you're a day trader in it. So it's more, and I think the theme, we're gonna look at Bitcoin and crypto in a moment, but I think the theme for tonight is that listen to the market. It's not about, hey, it's up 10%, so I should risk 2%, or, it's just not hard and fast rules. It's, what is a tight pinch? You know it when you see it. It's like the Supreme Court's definition of porn. What is porn? You know it when you see it. It's not, we don't have to debate it. Well, that one has a nipple, so that's porn. That one has the nipple covered, but the lady's in this, super erotic pose. You know which one's porn and which one's not. What's a tight pinch? If you were to draw an anchor from here in here and they came together like this, is that a good pinch? No, but it doesn't mean you can't trade it on a shorter term time frame. But keep your expectations real and say, if it gets above here, my stop goes below there, not below the low of the day. That's ridiculous because the distance it has to move to daily R2 where it might encounter supply is less than what that stop would be. So that's just foolish. I'm getting questions. Chinese stocks, no interest in them. Again, the whole point and the of these webinars is educational. It's very clear on the instructions when you sign up for this webinar what this is. So I'm not going to talk about individual stocks, especially with 2 minutes left. What I'm going to do instead is we're going to look at crypto here. So let's take a look at Bitcoin first. And the question that I got was, why did I sell my crypto? Well, I bought it over here at 62 and change. One, I'm a trader. I'm not holding, I'm not looking at Bitcoin as a hold it forever. That's not what I do with Bitcoin. I bought it down here. I sold some on the night of the election. I sold 25%. I sold some up in here. I sold some on the pullback and no screen. So for some reason, it's not showing. Okay, so it's not showing. You're just going to have to listen. I'll do it audioly because if you can't see the screen, I was only going to talk about them for a minute because that's all that's left in this I sold crypto because I've been holding it for 3 months now. It's not doing much of anything. I've got a nice profit in it. I don't want to see my profit disappear. So I sold it thinking that it's likely to head down. And if it, I just don't see the advantage to holding it. I felt like, and I still do think that we're likely to pull back down to the anchor from the October low that I've pointed out. And I'll show this in the midday video tomorrow. But that I've got a bid down near 90,800, I think. So I'm okay not being involved in Bitcoin. It's doing nothing. It's just opportunity cost in here. Anyways, that's all the questions, everybody. So as always, when you have a question, please in the future, always just send them in to atbook@gmail.com. And that's the protocol. We'll do this again next month. If you're interested, I'm not here to give anyone a high pressure sale, just give you the information. I do these every other week for Alpha Trends full member subscribers. I've got a Discord channel where I give a lot more information and a lot more education. So thanks again for being a Alpha Trends member on Twitter, and have a good night, everybody.